Happy Wednesday and welcome traders. I am Rachel Deshelle, your new head of technical research and strategy here for Schwab Center for Financial Research. And of course, your host for this trading price patterns class. Now, this is a class where we make the basic assumption that you are already familiar with the basic concepts of technical analysis, and we build upon those to discuss waiting for confirmation, patterns across various time frames, position sizing, all the fun things when it comes to trading. Now, I am joined in the chat today by my friend and colleague, Mike Fairborn. He will answer your questions, comments, concerns that I cannot get to today in the chat. Now, I'm excited for what we actually have in store today because we are going to focus on a couple different things. We're going to focus specifically on the Mag 7 stocks because there is some short-term technical formations there, but we're also going to look across time frames to take a look at maybe some anchored VWAP pinches that actually may be occurring and price may be breaking out of in these various stocks. So stay tuned with me today during the session to talk about that. Now, please like this video if you find this information useful. It'll help other traders find this information too. And of course, please subscribe to our Trader Talks on Schwab Coaching. So now let's hit those important disclosures here before we get started. So keep in mind that options carry a high level of risk and are not suitable for all investors. We are going to cover general information. This is for general information and should not be considered any type of individualized recommendation or any piece of advice. And we do not recommend the use of technical analysis as the sole means of investment research. And lastly, we're going to cover the paper money software application. Keep in mind that there are some differences between paper and live. Okay, so for our agenda, I guess the announcement is just come join us at our market drives and trading workshops events. We actually have one here in, not here, I guess, there in Chicago this weekend. I will be there for that. If you are going to be there in Chicago for that trading workshop, please holler at me in the chat. I'll be happy to meet you there. And then for the rest of our agenda, we're going to start with the market overview like we always do. Just take a look at the major indices. We are going to review our old trades, make some modifications, walk through our trade management, and then we're going to find new price patterns and place new trades. So let's dive into Think or Swim, and let's take a look at this pattern that's playing out in the S&P 500 so far. It's playing out a little bit slowly, but we did have a breakout a couple trading days ago. We now have about 5 trading days closing above this old level of resistance of this triangle consolidation pattern. So while we may have a little bit of a down day today or a little bit of a day that's a little bit flat, we still have had a sustained break of this triangle pattern. And when we are looking for confirmation for these patterns, I know in this class we talk about like the 2% rule, but that confirmation can come in many forms. That can come with 2 to 3 closes beyond a certain level, whichever percentage filter that you're comfortable with. So for a trader, we may say, hey, we may see confirmation here that we have had a breakout. Now, when we're looking at this measured move that could possibly occur from this triangle breakout that we saw in the S&P 500, we just measure from the widest point of the triangle, the pivot high to the pivot low, and we can actually see that a measured move could possibly put the S&P 500 up around 7,900 in a matter of roughly 5 weeks, because that's how long it took to complete this pattern. So we know that the market tends to respect the symmetry in price and in time. So however long it took to create the pattern, whatever the depth of the pattern was, typically you will use that as your measured move and measured time objective as well. Of course, there's no guarantees when it comes to trading price patterns, but that is how we will trade them. So We have more to cover in this class. I also wanted to bring up another chart. I know Kevin covers this quite a bit in Trader Talks, but I thought this was a good one to look at. We can see if we just kind of look at all of these different indications of market breadth, we have seen that while the index may be, I don't want to say struggling, but hasn't made new highs yet, we can see that breadth is improving under the surface. So while the stock market is telling us one thing and it hasn't reached those new all-time highs yet, we can see that market of stocks has been improving under the surface. We have about 66% of S&P 500 stocks above their 200-day moving average, about 63% of S&P stocks above their 50-day moving average. We actually see the New York Stock Exchange new yearly lows, hitting new lows there. And we have the advanced decline line on the New York Stock Exchange hitting new all-time highs. The only thing that has not reached new highs yet is this New York Stock Exchange new yearly highs measure here in orange in the middle. So what that's telling us is that there's a ton of room for expansion and possible rotation here. So all different things to keep in mind. We want to look at the surface of the market, but we also want to look under the surface as well. Okay, let's review some of our old trades that we have placed in this class. Now, keep in mind, with this job change, this is the only class I teach anymore. And this was my favorite class anyway. So we're going to focus just on the price pattern section of this page. Now, we sold a put in 3M here, and this actually expires in 2 days. Right now we're at 83% of our profit potential, a profit of about $207. We can make up to $249 since that's what we collected, but since we have about 2 days left till expiration and we've squeezed a lot of the profit out of this position, we're going to go ahead and close this one today. So I'm going to create closing order and buy this short put back. Okay. So we just had one contract. We're going to try to go for the midpoint here, do a little bit of price discovery, hit confirm and send that to our price patterns class there. Okay. And we just got to fill on that one. So we took profit on that one. Now let's look at a couple other ones. We're down a little bit on Opendoor Technologies. We still have quite a bit of time. Okay, so we're down a little bit, but we still have quite a bit of time. Let's go ahead and look at the chart on this one. Okay, so on the chart, we can still see we're at the middle of that range, kind of making our way up there. So we're going to still hold on to that one as of now because we're still holding support. We're still in the middle of this range. We're still hoping that the price of the stock, as we can see, maybe a hold right here, has occurred at this little pivot low. We're still looking to target the upper end of that range. So still a ton of time on that one. We're going to leave that one as is. Okay. Now we do have Prudential Financial. Okay, so we still have about 2 months on this long call option. And we are about at a 50% profit taking area right now. Okay, so that could be an area where we could take some profit, although we do have quite a bit of time left. So let's take a look at what the chart is telling us on Prudential here on this one. And ignore some of the little anchored VWAP squiggly lines that we have on the chart because we're going to hit those next. So that's why I'm leaving those for that reason. So when we're looking at Prudential here, remember we were actually trading this, we were looking first at this double bottom that actually occurred here in this stock. And then we saw that, hey, maybe a larger inverse head and shoulders pattern may be crafting itself out here. So we noticed that this old resistance was 111. And we had these little tiny shoulders on the left and the right hand side. So we took a bullish position with a bounce there, and we are now kind of reaching this zone right here where we had this prior gap, which is pretty close to those yearly highs, and that's where we've been finding a little bit of resistance there. Okay, so this could be 100% an opportunity to take a little bit of profit off the table. Okay, so if you had multiple contracts on this one, you could say, hey, maybe now's a time where I consider to take half of my profits off the table. So that could be something that you could do. What we're going to do is we're going to take the profit off the table on this one just because it is hitting its head on a little bit of resistance here. We are at a pretty decent profit of about 50%, and we're nearing those all-time highs as well. Okay, so we're going to go for closing out of this trade as well. Even though we still do have quite a bit of time on it, we're going to close that one out as well. So I'm going to create closing order. And we're going to try to go for the midpoint here. So the midpoint between the bid and the ask. And sell that call back there. Okay, perfect. And we got a fill on that one. Okay, couple other trades that we're going to look at here. Okay, so we had our Upstart, which we have a little over a month left in. So we had 3 long calls of Upstart. And I remember that one because we traded this breakout of this triangular pattern that we had here at the lows. And we can obviously see it ended up being a false breakout because we saw price breakout to the upside, but then we saw price enter back into the pattern, and right now it is actually testing this level of support. Okay, so right now this pattern, this is typically where you would see a breakout in either direction since we're getting pretty close to the apex of this triangle. Okay, so I'm going to draw that full apex there. Typically when you get to like 70-75%, maybe 80% of that pattern completion here is typically where you see that decisive break. So we're not going to close this one yet, but what I will tell you is as a trader, we may be looking for maybe a 1% or 2% break beyond this level of support, or maybe it's going to rally back up here past resistance. So what we'll be looking for to either close out our trade to the downside to say, hey, this didn't work in our favor, we're going to close this trade out. Maybe we're looking for a 2% break lower, or maybe 2 to 3 closes beyond that level of support. So that's going to be what we're going to be looking for there to cut those losses there. But we still do have a little bit of time, so we're going to look more to next week to manage that trade. And then the last one is Wells Fargo, so WFC. So we do have a little bit more than a month on that one, so not necessarily getting to that fast-paced time decay, because remember, the closer and closer we get to expiration, the quicker that we're going to see that time decay really kind of evaporate in our options. So with this one, WFC, Wells Fargo, we traded this base breakout here. We saw this double bottom pattern. We did see a break back below support, which became resistance. Now it's new support again. So we're still going to wait for this one for another week. I know there's a lot of bank earnings coming out and things like that as well. So this one we are going to wait a little bit on since we do still have a bit of time, and it is hovering right around that old resistance, now new support. Okay, so now that we've reviewed those, and let's see, I do have a question in the chat about putting that link to the market breadth chart in the chat. Yes, I will share that with you guys. Here, let me find that here, and I will just share this grid with you. Now, keep in mind, these scripts are not guaranteed for accuracy, timing, or results. But I'm going to put that in the chat there so you guys can keep that one as well. I have another question here too. Rachel, when you get a continuation pattern from the bottom, is it better to wait for the retest versus a percentage over the breakout? The way that I will announce that or like respond to that is sometimes the retest never comes because sometimes the momentum is so strong and the demand is so strong at that particular level, it overwhelms that level of supply. And sometimes you do see that price never does come back and retest that level of support. So I wouldn't count on a retest. I would just stick with your levels of confirmation and then stick with your rules of where you want to manage your risk, because maybe we're not managing our risk right at this specific level. Maybe we're taking this prior consolidation as a level to manage our risk that says, hey, if we do see this, maybe this ends up being a false breakout or something along those sorts. Maybe price would retest that level of prior support that we saw in this shorter term consolidation. That's where we're going to get out of that trade if it kind of goes south there. Okay, so hopefully that helps. Now, what we're going to look at, I told you guys, we're going to focus on the Mag 7 stocks today because I think everyone has noticed they've been a little bit of the Lag 7 as of recent. So maybe the Mag 7 could be setting up in some technical formations for a possible break higher. We're going to look at both anchored VWAP pinches. We're going to talk about what those are, and then we're going to piece down to our shorter time frame and look at the technical formations that are occurring under the surface, and we're going to place a couple trades, okay? So I wanted you guys to look at this one first. Now, what I did on this one, you can see these little purple lines that you've seen on pretty much every chart that I pulled up here now. So what these purple lines are is they are the anchored volume weighted average price. So the volume weighted average price is basically just taking a specific point in time, specifically the anchored VWAP is taking a specific point in time that we're going to anchor that volume weighted average price to. So it's going to weight price by how much volume occurred at those specific levels of price. So what we use the anchored VWAP for, traders will use it, institutions will use it. They will anchor it to swing highs, swing lows, all-time highs, all-time lows. They'll anchor this on multiple time frames. So you may use this on the well, I guess it starts with the daily, but you can use this on the daily, you can use this on the weekly, you can use this on the monthly and anchor it to a specific point. And so you can even use this for maybe earnings dates or economic data dates, whatever type of date seems kind of most useful or most important here. So that's kind of what a lot of traders will use. And so a lot of the times traders will use these levels of the anchored VWAP as levels of support and resistance, and institutions will essentially use these as smart money break even points. So it tells them whether they're underwater on a position or whether they're over water on a position, or it kind of in a bullish stance on their position, or if they have been above their break even, I should say. So when you anchor these VWAPs to specific points, which you can do just by adding those VWAP studies here, we have them already built into Thinkorswim here. You just need to right click on a particular candlestick and you could set the date of that anchored VWAP to that specific date. So if you have two anchored VWAPs, just keep in mind you'll just have to specify what date there. And so the reason why traders will use these two anchored VWAPs, specifically from a swing high and a swing low, is because they want to almost use these as almost like a price or volatility type compression indicator. And so a lot of the times when you anchor these from a high and from a low, you can see that price will start to get squeezed in between these two levels. And so we know that when price enters squeezes, whether it's a consolidation, a range, or even a volatility squeeze, we know that those periods of low volatility or those squeezes tend to precede strong directional moves in either direction. And so what we're seeing right now is yesterday, specifically in NVIDIA, we had a close above that level of prior resistance. And now intraday, price is finding its way back below that anchored VWAP. So that is definitely a level you can see in the last 4 trading sessions. It's been tested quite a bit here. So what we're going to look for on a long-term basis, maybe an investor, longer-term time horizon trader may say, hey, we may want to wait for a 2% break above this anchored VWAP to give us confirmation of a directional move to the upside. That's been able to tell us that, hey, this trend direction has changed and price may squeeze to the upside, or we're going to wait for a couple closes beyond that level. So either percentage filter or a couple closes beyond that level. Okay. So that's what we're seeing here in NVIDIA in this one. Now let's take a look at what on a shorter time frame, an intraday time frame, what price is telling us underneath the surface and what technical pattern has been forming. Now, Barbara had a question, how does this differ from the TTM squeeze? This is very different from the TTM squeeze. So the TTM squeeze takes the Bollinger Bands and the Keltner channels. And when the Bollinger Bands enters into the Keltner channels, that's when you get that volatility squeeze, volatility compression. So you're kind of using this mix of standard deviation and average true range. You're piecing those together and you're overlaying it with momentum. And that's that TTM squeeze. Here you're just using volume weighted average price and you're anchoring it to two levels. So it's kind of showing you that squeeze there. I had a question about sharing this little label. I will share that label with you as well on that implied volatility percentile. That one actually comes pretty handy to put that on the chart because you don't have to flip back and forth between the trade all products tab to look at the implied volatility percentile, specifically when we are looking to decide on a option strategy there. So again, script's not guaranteed for accuracy, timing, or results there. Okay. So, and then trade and grow 24. Why not set a lower AVWAP to the lower low on 330 when the rally started? You most definitely could. We're looking at a shorter time horizon here. So we're looking at swing highs and swing lows there, but you certainly can set it to that. So that's based on the specific trader's preferences. So if you want to reset it to that, you can certainly do that and you can anchor it to one of those levels. Okay, so I'll show you how to do that and well, that's basically how you do that there. Okay, so now we're going to go to the shorter time frame here. So this still will, it's not a super short time frame, but it is allowing us to see maybe a technical pattern that could be developing here. So I'm showing this chart. I want you guys to tell me in the chat what technical possible, I'll say possible technical formation we may be seeing here. Okay, so I'm gonna wait for you guys in the chat because I think we may be seeing a couple different ones maybe aligning here. So I'm gonna zoom in a little bit closer to make it a little bit easier for you guys. Okay, and I'm gonna start drawing the level that I'm seeing as I wait for those chats to come through. Okay. And you guys guessed it. Okay, so we're seeing this same level of resistance being tested multiple times, right around 212, 213. Yep, I see head and handle and cup, or that cup and handle, or an inverse head and shoulders. Now, those both tell us the same thing. Those are both bullish reversal patterns. Those both are measured in the same way, from the very bottom of the pattern or the support of the pattern to the high of the pattern, which is essentially the depth. So those are both telling us the same thing. Those handles or those shoulders give us levels where we can manage our risk there. I even saw someone say a double bottom. Yeah, we had the double bottom down here too. It's full of technical formations. So this is why it pays to look at various time frames, because what you may be seeing on the long-term chart may tell the story of the shorter term chart, and depending on your time frame you can have different signals to trade on. But the most important thing for a trader, especially when you're looking for the highest probability setups, of course waiting for confirmation, but the highest probability setups occur when you see an alignment across time frames. So in the longer time frame, we did see that we did have a break and maybe a little struggle at the anchor VWAP there. So we can see that price is really battling with this long-term level of supply. And right now, if we piece down to the shorter term, we can see that under the surface, price is actually looking like it's setting up to make a bullish reversal here. So what we're going to do is we're obviously going to wait for confirmation. And so Confirmation, we're going to use our 2% break above resistance. So if our resistance zone is right around this 212 level, we're going to take 212 and we're going to multiply that by 1.02, and that gives us 216.24. So we're going to put that as close as we can to 216.24. So that's about $4 higher than resistance. And that would be where we would say we're waiting for confirmation in this case to be able to take a bullish trade. Okay. So that's where we would wait there. Now, we do have a couple levels to manage our risk here. We do have these lows right around 204 where the handle or the possible right shoulder could be taking shape. And then how do we measure this formation? Well, we take the very lowest point of the formation to the highest point of the formation. We're going to use those, that gray zone there. And we're going to take that to a possible breakout point and we're going to project it upward. And you guys know that I love to giggle about how a lot of the times these measured moves will align with a prior area of resistance there. Okay, and look, that is what we're seeing there. It's that prior level of resistance taking shape right around 235, 236 or so. Okay, now when we're looking at this, let's piece back to a longer term chart. We saw that implied volatility percentile here. Implied volatility is relatively low. Okay, so we don't know when price is going to break out. So we will have to wait for price to break out. We will have to wait for that level of confirmation. So there's a couple different trades that we could take. We could say that when the price of the stock is reaching this 216 level, we want to buy a call option. So that could be something that we could do. Or we could buy a bull call spread. Or if we just want to trade the common stock, we could say that we're going to put a buy stop order at that level to say, hey, wait until the price of the stock reaches this level, then send a market or a limit order that would execute from there. Okay. So today, to keep things simple, we're going to just go with stock orders because we're not seeing confirmation yet. I think we'll be able to get through some of these charts, some of these trades a little bit quicker if we're not using those conditional orders and going through Theo Price and things like that. But I want to verbalize the types of trades that traders may be thinking about and maybe buying a little bit in the money, maybe couple months out from expiration long call here, because if we're looking at an options trade, we want to take into account how long it took for price to complete this pattern, which obviously it isn't complete yet, but this pattern started roughly a month ago. So it could tell us with the market that loves price and time symmetry, it could take us about a month to get to this price. So if we know that as a long option buyer, if we know that the time decay really kicks into high gear at that 25 to 30 day mark out from expiration, we want to may want to take 2 months out from expiration, looking for a little in the money, higher delta type call to give us a little bit more directional movement should the stock move in our direction. But here we're just going to go with the stock order here. We're going to use our $10,000 OCO group. And so we're going to only place a trade that takes up $10,000 because that is our trade size. So we started with the count of $200,000 and we're not going to risk more than 5% of our account in any one trade. And so we are going to use that measure. We're going to use a buy stop to say wait until the price hits this 216. We're going to say 216.20. And it's going to become a market order. Now, keep in mind that there are risks with stop orders, and it could be that the stock gaps up, gaps down, in this case, gaps up overnight, and we may get a fill that is nowhere close to that activation price. So keep in mind, that is the risk, but we are using a market order because we are saying that we want more control of the speed of execution than the price there. Our limit order is going to be that measured move to the upside. So we are going to go with that 235. I'm just going to keep it nice and pretty, nice and even with 235. We're going to put our stop to the downside right around 204. Okay, so 204. And again, this is waiting until we get that confirmation of 216. We're not entering this trade right now. Getting stopped out at 204, we're saying wait. If the price even gets up to 216, that's where we're going to put our stop there as well. Another thing that you could do is put your stop a little bit tighter if you want a more favorable risk to reward. So we can always move our stop up, which is what we'll do in this class. But an easy way that a trader may use a technical pattern is just putting it on that shoulder of that inverse head and shoulders pattern there. So same risks apply with those stop orders. We're going to hit confirm and send. We're going to send this to our price patterns class. Okay, we're going to hit send there. Okay, let's look at the next one. We're going to look at Google. Okay, Google. We have a similar setup here, you guys. Look at this. Okay, we're going to set this date to the highest point here on our anchored VWAP, and we're going to go with this one. And then we're going to set this one to the lowest one, because I think by default it sets these as the same date. Okay, so with Google, we put our anchor VWAP at the pivot highs, pivot lows, and we are actually seeing a pretty bullish breakout today. Okay, so we're seeing a pretty big move. That anchored VWAP, old resistance, now new support is around 360, 358. Price is about $7 higher right now, trading that much higher right now. Now, before we're going to piece down to the shorter term, which as soon as we piece down to that shorter term chart, I want you guys to tell me what technical pattern you are seeing develop under the surface. So we just saw that anchored VWAP squeeze. We know that that's a bullish squeeze, and we may be seeing that here. And maybe you guys are seeing this technical pattern actually here on the longer term chart, because it's actually pretty evident here in the longer term chart as well. So if you see one, throw that out, but we're going to zoom down to the shorter term chart and look at the intraday here. Okay. And what do we see? Okay, this one is way too obvious here. Way too obvious. Okay, I'm gonna draw this. You guys are super smart. You have been in this class for so long, and you can see that this is an inverse head and shoulders, or a possible inverse head and shoulders. You have this resistance right at 374. That is a perfect level of resistance there, right at 374, right on the dot. Okay, so that's your resistance. And let's take our measured move. Maybe this aligns with a prior high. We shall see. From lows to highs, it's about a $44 move in Google here. That's a pretty big one if price can break out above this level of resistance. And what do you know? That would actually put us past those all-time highs. So we may see price run into a little bit of resistance before then, but that will put us, with a measured move, again, not a guarantee, right around 418. Okay, so that's kind of what we're seeing here. Big bullish reversal pattern. The reason why we had lower highs and we had lower lows. Okay, and now we're seeing the same level of highs and we're seeing a higher low. So that's basically just the nature of these patterns. You're seeing them go from lower highs, lower lows, which is a downtrend, to the same level of highs, which is more of a range, and then a higher low. That's the first sign of that change in that trend. And then the next thing we see is that higher high, and that's that breakout. So that breakout gives us confirmation that this is now turning into from a downtrend to a range to an uptrend, okay? And so we're going to look at a couple things when we're trading this pattern as well. Keep in mind, volatility is a little bit heightened here. So with a break of resistance, we may look to sell a put. We may look to sell a short put vertical, maybe something along those lines. But this technical formation, again, has taken about 4 or 5 weeks to possibly complete here. And it's not to completion yet. This may actually get drawn out a little bit further and make a bigger right shoulder here. So maybe we do see a little bit more time that this takes. But again, we're going to use our same rule. So we're going to look for a 2% move above resistance. So if we take 374 times 1.02, that gives us about 381.50. Okay, 381.50. We're going to put that as close as we can. Okay. Which, you know what's funny? If we take that level all the way back, that's kind of where we saw those former lows there. So it actually aligns with a specific level. So that's going to be our entry for trading this bullish reversal pattern. We're waiting for that confirmation. I know that's quite a bit of room to give up there, but we're going to wait for confirmation there. Now, to make this a favorable risk to reward profile, because we know that our entry is going to be up here, we may want to look, since these are pretty deep shoulders here, we may want to take a look at this very long candle here. We may want to actually look at the midpoint of that candle as a level of placing a stop order or managing our risk, okay? So we can do that there, or we can put a really tight stop and manage our risk at 374, okay? So that's a couple things. And that gives us about, so this is about $26 of reward. So it's about $26 of reward. And if we were to use 365 as a level to manage our risk, that's about $16 there on our risk, okay? So we may actually want to make this a little bit tighter because most traders may look for a 2-to-1 reward to risk or even a 3-to-1. So if we made this a little bit tighter and put it at 374, kind of right around that level or even right below that level, let's say maybe 373 if price comes back and retouches that after it breaks out. If we say 381 minus 373, that gives us about $8 of risk, okay? And we're going to use that. Okay, so that's about a 3-to-1. So that's a lot more favorable for a trader there. But again, if you want to have a little bit more room to the downside in case it retraces this, you could. But of course, we're going to move up our stop like we normally do. So we're going to go to buy custom with OCO bracket. Same thing as before. Same rules apply with our stop orders. So we're going to say wait until it hits this particular activation price of 381. We're going to say 381. That's going to be our confirmation. And then our profit taking level, we're going to say, we're going to put that at all-time highs. We're not going to go all the way up to that 418. We could, or what we could do is we could say we could close half of the position at the all-time highs, close the other half up there. So that's another way we could go about it. So let's actually do that here. So we're going to start with the 408, and then we can adjust that accordingly. And then we're going to put our stop down at a resistance, which would become new support, right below at 373. Okay. Same rules apply with those stops. Remember, not guaranteed to be executed anywhere near that price. And we're going to hit confirm and send. We're going to send this to our price patterns class. We're going to double check that order, and we're going to hit send. Okay. Awesome. We don't have time to do one more, but we know that this is very Mag 7 focused, so I wanted to show you two other charts. Okay. Two other charts. We're going to anchor this one to the highs. We're going to anchor this one to the lows. Okay. Look at that. We had another anchored VWAP pinch breakout. This one in Amazon looks a lot more decisive than the others, doesn't it? Even the open of today's session was above that level, and the entire trading range of today has been above that level. So we have a breakout there. Let's look at the shorter term. What are we seeing in the shorter term? We're seeing all of these very similar technical formations here. Okay, so what are we seeing? We're going to draw these out again. We have an inverse head and shoulders here on this one. And this one's slightly more bullish because the reason why is because this right shoulder is a little bit higher than this left shoulder. Okay, so it's carving in yet another higher low there, and we're actually seeing a breakout of this right now. So old resistance was about 250. If we multiply that by 0.102, we've got our confirmation right here. We actually have our confirmation right here. So if we wanted to take a trade, we could put our stop maybe right below here, because 255 is our confirmation there. And then let's measure this move. Let's take a measurement of this move here. Okay, let's do this. A measurement of the move. What do you know to all-time highs? Do you think we can get in one more trade here? I think we can get in one more trade here. Okay, we went through this one really quickly. I know we went through some of these pretty quickly today, but don't worry, these are all going to be recorded. You guys can watch this back as well, but let's just place this trade. Let's just place this one. So we're going to work with our same position sizing rules. We're going to start with we're actually going to use a market order since the price of the stock is above that level. We're going to place our profit target right around 276. Make that a little bit even there. And we're going to place our stop down below at 248, 48.51. Okay. If we wanted to, we could make our stop a little bit lower here, but this gives us a more favorable risk to reward. So we're putting it at the low of that candle, okay? Putting it at the low of that candle. We have to make this a day order here on this market order. And keep in mind, again, that rule, that risk applies with those stop orders here. Okay, we're going to hit send to our price patterns class. Okay. Wow, we're getting through lots of trades today, you guys. I see Michael said, go, Rachel, go. Yeah, we are moving. We are moving through these. Let's look at the last one we had here, Microsoft. Obviously, this is another tech giant that has taken quite a bit of some hits here recently. You can notice that implied volatility is at the highest level that it's been all year. This is probably where option buyers are probably going to typically avoid this because option premiums are going to be pretty high. And we are going to see sellers maybe a little bit cautious here even. So if you're looking at this one, just keep those things in mind. If we look at that anchor VWAP from pivot highs to pivot lows, again, a bullish breakout of that anchored VWAP pinch. If we look at the lower time frame, what are we seeing here? Well, we're seeing a couple things. Let's bring in that Fibonacci retracement. Let's see what resistance we're hitting our head upon right here. We're going to remove the 50% retracement because that is not a Fibonacci level. But where could we go from here? This one looks less like a inverse head and shoulders, but maybe more of this. Maybe those converging lines right below that level of resistance are giving us this little triangle. So if we're looking at a shorter time frame, we can measure that depth of that triangle, which is about $22. We can take that measured move, put it at that breakout point, and that's going to put us on the way to that 61.8% retracement there. So we are seeing some technical repair that is occurring even here in Microsoft. So a couple different levels you can trade against as a trader, and hopefully just going through these examples in the Mag 7 stocks. Obviously, the index has not broken out yet, but you can see its largest constituents, which have the highest ratings, are right below these levels of short-term resistance. They're breaking out on that longer term, as you can see with those anchored VWAP pinches. So they're getting into these bullish regimes. We're above that smart money break even in a lot of these names. But under the surface, on that shorter time frame, we're still waiting for those technical breakouts. So again, hopefully this shows you how we are going to use technical patterns, look at price action on multiple time frames, how you can use a couple of these indicators as indications of support or resistance, and then also just showing you how to put it all together, discussing how to wait for confirmation, being a little bit patient because we want to react to price action with technical analysis, not predict it. This is not witchcraft. This is a very disciplined approach to markets. So it's an art, not a science, but it is still a disciplined approach to markets. And it gives us levels to manage risk and teaches us how to position size accordingly. So thank you, Mike, for being so helpful in the chat, answering all of these questions as we go. Thank you all for tuning in. You guys are awesome as always. I just want to say we have the best viewers out there in the business. We have the best clients. So thank you. I can't wait to see you guys here in Chicago here soon. Please like this video. Please subscribe to us on Trader Talk Schwab Coaching. And please give Mike and I a follow on X. We post a lot of charts. I'm Rachel-CS. He is Mike Fairborn CS. Thank you, everyone, and see you later, traders.